Yeah. So kind of similar what you said. I kind of use, you know, pretty similar stuff, 5% sizing. Sometimes I may creep over a little bit closer to 6%, but keep it
Yeah.
in that general area. If
Yeah.
I do plan,
There's
like
time
if the plan
like
is
five and a
to
half. Yeah.
size in, just size in 1.5%. It now if it invalidates, I just stop out. I'm not gonna try to like add full size, restructure the it's
No.
going down lower. Let me
Mhm.
add no, I just stop out. So I
Yep.
don't try to like yeah, just on to the next mentality, especially as you hit that stop loss. And the same thing, if you hit your target as well and you're only in 1% size, well, take the money and run. So
Yeah. For sure. And I'll when I look at it as entering a and I my Streamlabs just crashed, so not sure how much I caught of the first part of this recording. I actually caught it right as you were starting to talk, so it might be truncated. It might we
doesn't
might
like me.
it does not. I'm like, dang it, Streamlabs happens every once in a while. But when I'm taking 1% position size, I'm saying, okay, I want to have my foot in the door. I want to be paying attention to this, and I'm giving myself room to be able to either scale in as we're moving up, or if we have a little pullback, but allows me to at least have some part of what that trade thesis is. And of course, if TA is invalidated, I'm not adding. But if I've got pretty good support, and I'm not sure if we're going to come back to that. But if we do, I'm okay with it. And I did that with the Tilray long-term position sizing. Um, so added, I think I'm sitting at 3.5% as far as my long-term portfolio. And it's fun to always when you see, federal news announcements, the change of classes, that kind of thing affect a ticker that's like that. But I don't actively trade it. So I'm really looking at it from I started with 1.5%. I added 3% more on the pullback. And I might add another 1.5%, but I'm kind of comfortable at 3.5. And so that's a good instance for me of I liked it here and I like it even more here versus I'm buying it on the pullback because I have to be right. I'm gonna hold that thing for probably, my guess would be 5 to 10 years. That's my typical time horizon. But very likely it's going to be past my grandkids who are not even born yet. So it's one of those, you have to look at the time frames also of what that is and what you're intending to do with a trade. So I like that, you're saying, all right, this is where the start is, and then you would add, do you add to it as if the price goes in your favor? So if it's invalidated, you cut it, but are you adding to it as the position is improving?
Yeah, it's always like that tricky like gray area because like I tend to enter at a spot like you said, and if I use the scale in, scale out method, if it works in your favor, it's almost like, well, why didn't I use full size? And if it comes closer to the stop loss, like right at the stop loss level, that's really where I'm looking to add.
Yeah.
I rarely size up into trades. I know some people do. I rarely don't. I just take the money and then reset, maybe wait for a back test or something like that.
Yeah. It's pretty rare that especially if something has a really outsized run up, I like to add to winners, but for me historically, oftentimes that turned into now we're going to just consolidate here and now my cost basis is higher, kind of
Yeah.
situation, or it even pulls back and eats into some of the profit that I had on the smaller position size. So I would definitely agree with that. Shadow, how about you? I think he's here anyway.
Yeah, I am
Okay,
absolutely here.
awesome, would love to hear your feedback on
Wait,
that.
sorry. What question are we on now? Because I'm still on the
um
last question in
oh,
my head.
position sizing and yeah,
Yeah,
just
okay, that's
kind
the
of how you
question
how
I'm
you
still on.
manage those. Yeah, we're still
Yeah,
talking about that. I think position sizing is such a big thing as far as psychology, because you can't manage your psychology if you're oversized. You're literally, your
yeah,
IQ is diminished by at least 20 points, if not more. And it turns out the average IQ is like 85. Who knew? I was like, who? I don't even, what? It's a thing.
yeah. For me, it's all about what your trading plan is, and like so, like starting off on the option side, it's a lot easier because you can just say, okay, I'm going to use 2% of my pore size, and then as your capital gains ground, that size naturally just increases and stays consistent with 2%. Um, but with futures, it's a little bit different. And usually you have to set your own benchmarks, and that's primarily when I use when I start a new personal account, is I'll start with half a risk size.
Yeah.
So like 5 MES, or even just all the way down to 1 MES, depending on what size I'm starting with. And then just benchmark it. So like once I have 200 in profit, then I'll increase to 2 MES. And then once I'm $400 in profit, increase to 3 MES.
Yeah.
And then so on all the way up to one full ES contract. And then, but as far as averaging down and averaging into traders or anything like that, I just find it simpler, especially with the future contracts, just to
Let
pick
it
your entry price, your stop loss.
and let it be invalidated or fulfill. Yeah.
Yeah.
And I know you use fixed stops. You recently moved from $3 fixed stop to $4, and your take profit. Do you put your limit orders in for the sell, or is that your target and you want to see what the interaction is? Because I know it's like $4 and $8. Or you put the maybe the limit in at $8, and if at $4 it's stalling, you execute it yourself, or how do you manage that?
Okay. Sorry. I typed at the same time, trying to
Yeah,
multitask.
the three T's: typing, talking, and trading. Oh, right.
Yep. I was,
Oh,
I switched from 3 to 4, just from looking at the historical trades and where we're at on ES. So when I did my back testing and structured my 3 point stop loss, we were at a much lower price point. I think we were like down in the 4,000
that's
levels.
right. Yeah, that's been a
So
while. Yeah, it does, and the volatility has expanded for sure.
yeah, and the volatility expanded, but just the percentages of movement is still the same, but the average trading range per candle is much greater, uh, just for the fact that the price is much higher now.
Oh my gosh, I
So
was talking about that yesterday. I mean, comparatively, when you look at that big picture, I started trading QQQ in February of 2002. There's the rooster on Q. February 2002. And, through the years, the people traded that opening range, that opening drive, because that was the only time there was actually price movement that was going to make you some pretty good money. And then you come back for a power hour, and hopefully me and that rooster are going to be good friends here shortly in the pressure cooker. Now, I actually like him. He's pretty good with the hens, but it is funny how, like, on cue, he helps me out. So we used to have to trade in those high volatility times because it was the only time you could get a move, like we see at zombie hours now. 2 o'clock in the afternoon, nothing's happening, and we have a $5 move. So, adapting to what that looks like as far as our trading goes, it's allowing us to have more opportunities, but an entire week worth of PA plays out every day, sometimes even 2 or 3 weeks from previous markets. So we're living in, like, or I guess seeing history being made as far as the changes in the markets. And it really goes back to the fact that nobody's putting together, as far as like BlackRock or the large firms, they're not putting together an Apple position. They're not putting together an Amazon position. That was all done in 2009. So the
oh, for
more
sure.
the more they're not trading, which they're not selling. He has not crowed all morning until just now. Well, he crowed at like 5. That's super funny. They're not putting together positions, and you have to think about it like an ocean liner. They're who create the stability. They're who, when they're trading, when they're putting together positions, we actually see a contraction in volatility because they're not going to sell it out on, even like in COVID, which was that flash crash. That was the fastest correction. That was crazy. Everyone was shocked. Everyone was short, and they were all covering. It was pretty interesting to watch it play out. But when we look at history, it's doesn't typically happen like that. So that was kind of the turn, realizing that it was pretty orderly. It was very mechanical as far as how it went. And those larger firms didn't sell their positions, so it didn't create what everyone was expecting. And they're not new, like, oh, look, there's a new, brand new big bank that's going to put together new positions. They're not. They've been
Yeah,
there for
no,
a
there
long
is.
time. And so we're all these, the retail traders are out there and are like, maybe it's a yacht, right? It's not a ocean liner by any means, but it might be a decent sized boat, still gets tossed around in the waves. That's that whole volatility piece. There's more motion in a smaller size craft when you're on the water. And I guess that's the best way to look at what that is. So the expanded volatilities have been in our favor, and it pretty exciting to be helping people learn how to trade in this. But don't be mad if it does eventually contract as things start to mellow out. I don't know if it will. I actually thought it was going to start doing it more so than this, and it really hasn't.
Oh, for sure. Even just a year ago,
Yeah.
my average trade time was like 32 minutes, I think,
Mm-hmm.
for a 6 point profit target. And now it's like, I think it's down to like 15 minutes.
Mine are much shorter. Mine
So
are 10 to 15, where
yeah,
I like 2, 3 hour trades. And it's weird to shift those gears because I want to put it in and see my TA play out. And it happens in 10 minutes. And I'm like, well, I guess here we are. That's going to go ahead and
yeah,
take it. And I do try really hard not to alert things that are going to be scalps. If I'm scalping and I'm like, well, it's already moved, it doesn't make sense. If I think that it's something that is going to be actionable, I when I alert my trades, it's because I believe that there's probably going to be a back test to where I entered, even if it has run a little bit, to allow people to be able to look at it and look at their charts and not have to chase it. And usually members get at my fill or better, which is great. At least 50% of the time we see that happen. So it is really important not to chase things in this type of crazy volatility. And Tyler, you and I haven't talked about stops a whole lot, how you set them, things like that. But curious to hear your feedback on the volatility and how you're managing the risk and changes in your trading over the last year.
Yeah, so I've really been trying to grab more time when I see
Yeah.
trades potentially needing more time. So like if I see, I don't want to say scalp because I really try to avoid them, but a less than 30-minute trade, I'll try to get shorter dated because if you grab, 2 weeks out, you're getting 5%, 10% on it.
Right.
So
Right.
you have to kind of, use a little bit brain work to know shorter dated or longer dated. And that's just kind of trading with the market. You'll understand that after doing it a little while.
Yeah.
But for stop losses, I try to stick over a 2 risk to reward ratio. So I use the little tool on Trading View.
Okay. So you just use the
And
ruler and be like, all right, here's the
yeah,
measured
and then
move. And
I try to correlate it to a level. So support level, resistance level, fib levels. Rarely use like like an EMA for a stop, but yeah.
yeah, and that goes back to the relevance of if other people are looking at those and they're widely watched, it can be a beautiful thing for sure.
Yeah, and just trying to use multiple time frames as well. That's really key. Don't get faked out on the 1 minute when the 30 minutes bouncing or something like that. So
That's
that's something
huge.
that's
Yeah, the 1 minute. I know Thor actually manages his exits on the 1 minute. So he
mhm.
doesn't look at the 1 minute all the time, but he wants to see kind of what that bounces. And we've been seeing a lot of that lately where, and I talked about this yesterday, Someone Voice, where the candle looks huge when you look at the 30-minute candle, but when you go to like a 5 minute chart or even a 1 minute chart, pretty much all of it happened in 1 minute. And then the rest of it is just
Yeah,
consolidation that aren't really tradable. They're definitely, if you caught it, not alertable. You had to have just been in the right place at the right time. So
exactly. Yep.
changing environments for sure. I'm going to go back just in case because I think I got the earlier stuff recorded, but I'm going to just touch it back just in case so I don't have two different videos. So the two things that I talked about earlier are the early bird gets the worm, but the second mouse gets the cheese. And just as a quick summary of that, it really goes back to trying to catch knives, trying to call the top, that kind of thing. We want to be shorting the back side of the move, not the front side. And we want to be, from a key level perspective, very, very confident in what we're seeing as far as levels and understanding what your win rate is on those kinds of trades. because counter trend trading is a problem. And that whole concept of second mouse gets the cheese is because the first mouse got killed, right? And those are accounts that are being wiped out because they're calling the top, calling the top, calling the top, which is why we have rules in place. Like for me, three consecutive losses, I'm done for the day. It's done because I'm obviously not seeing the market well. And then the other part was my reference to the more on trade adding to positions. So if you're listening to this, and I think it's going to probably just be this one video, this was at the beginning of what we were talking about, but I'm plugging it in. So a little bit of a play on words there, the moron trade. So there's more, M-O-R-E-O-N. So more on, and moron, M-O-R-O-N. Not trying to call anybody a moron, but when you add more on, there's probably trouble. And Thor and I talk about this a bunch. He has a saying that he uses all the time. We're not going to throw good money after bad money. That's adding to losers, sizing up so you can be right, which all of a sudden messes up the psychology. So that's a quick, I guess, a quick recap of what that is. Let's see. Some of the stuff that I really think about, as I'm going back, and I am rebuilding or working on rebuilding the psychology channel. When I got hacked last year, it looks like a bunch of stuff is gone. All good. It's all in there anyway. It's all what we talk about all the time. But, thinking about the concept, and I guess maybe it's very relevant because of FOMC today, trading is more about knowing when to trade than it is about trading. And don't get me wrong, like you have to understand TA, because if you're just throwing spaghetti at the wall, some of it's going to stick, but most of it falls off. So even though waiting is painful, the pain brings wisdom. And I refer to this all the time as trips to the spanking machine. Like you're going there. And when you get whacked, are you surprised? After a certain point, when you've done something enough times, you kind of go, all right, I can recognize that. I can spot that from a mile away. I'm just going to dodge right around it, right? So the wisdom brings balance to your trading because you don't have to be in that trade. It's that whole thing that I talked about earlier in market talk. Gambling is have to have money on the table. Trading is managing your business and sitting out when you're in an area where you're like, I don't know. If you hear that, I don't know in your head, you need to be sitting out. So it can be excruciating. I mean, like we have sat and watched PA really for the last 3 days. And it's kind of funny because this is every FOMC, but we get used to that, like dancing in and out. It's that whole matrix style kind of, faster price action, trading in and out. So when we come into consolidation ranges, it literally is excruciating to sit there and you find people who are boredom trading or who are trading because they have to make money or whatever that is. We want to make sure that we're not trading for excitement. And ultimately, if you are excited at all, palms are sweaty, you're sitting forward in your chair, heart rate's up, you should just get out of your position. You should just be done. Just flatten it, just close it, exit, done, because you're either oversized, you have no damn business in that trade, or something's up, right? You're trading for emotion. There's some problem if any of that's happening. Now, don't get me wrong, you're sitting in, 3 ES contracts and you're up $20 on a move. You're like, damn, that's awesome. Wow, right? You're excited, but excited because of the seeing the market well is what's really important. You want to be really, really careful about getting happy or excited when you make money. And that's not winning. So well-executed trades can be losing trades because you cut your risk. What we're really looking for is, did you manage what the risk was and did you let the runners run? So I get excited when you hear me like, yeah, all right. It's because I saw the market well and my execution was good in relation to seeing that market well. So if I see the market well and my execution's not good, I'll be like, I made money, but I was slow on that exit, or I took the profits and it continued to run or whatever, but I'm like, okay, I'm going to manage this based on not blowing up my account, but I'm not going to get like, yes, I made 20 points on ES on 3 contracts, because the flip side happens when you get real happy about that kind of stuff and it becomes very sad when you lose money. So if you don't want to be upset, if you don't want to be frustrated by losing money, you got to really kind of curb how excited you are about making money. So losing trades can be well executed, can be a good trade, and winning trades or profitable trades can be a very bad trade because you didn't follow rules, because you didn't pay attention to what you need to. And it takes you into this cycle of being addicted to random rewards. And I think that's one of the biggest problems I see in trading is that addiction to random rewards. Oh, you hit it like new trader hits 200, 300% because they left it there and didn't manage it well. That creates a cycle of all kinds of problems for trading that's really, really hard to break. So I'm going to give everybody a challenge, 30 days of commitment to have focus on defined trading systems. So your edge, find out what your edge is. It's not going to be what my edge is. It's not going to be what Tyler's, what Shadow's. We're here showing what we're trading for our personal accounts and educating and, making sure that, we can have this collaborative community environment, that whole mastermind concept. But we're not telling you what to trade. We're just saying, here's what I'm trading and why, so that hopefully you can start making your own trading decisions sooner rather than later. But understanding what we're looking at and what you're going to do is there's two ways to look at this. If you did everything exactly how I did it, you're going to get similar results, aka taking all the trades. I've got a 70% win rate over the 2.5 years in the previous server that were bot tracked. But that means I lost 3 out of 10 trades, right? So you see kind of invariably newer traders, and I don't know how this happens, newer traders taking those losing trades. I don't get it. If we could figure out how to do like a anti-venom or inoculation against that, we would definitely do it and we would take it ourselves. But the idea is to learn from experienced traders who are consistently profitable, and then define your edge by taking those pieces. So you follow everything. It's hard to do because you're not inside my brain. I try as much as I can to verbalize, even though it's funny. I don't know if you guys are going to believe this, but I'm actually not a talker. When I'm not, I guess the term is performing, and when I'm not like talking with members, trying to give that education piece, I guess it's the educational, maybe not performance, but I'm not the nonstop talker. I'm like, all right, nothing else to say. I'm done. So I really try to narrate the things that I wish somebody else would have told me, not what I'm just talking about. So going back to your defined system, you need to define your edge. You need to find what works for you. And if that's the 10 MA 5-minute protocol, it's pretty clean, doesn't have to be fancy. You need to pick what you're going to do and stick with it. So if you're jumping around trying a bunch of different things and you tried it 3 times and it didn't work, the blame's on you. And we've got to, be honest from a coaching perspective, from a education perspective. 3 times doesn't do anything, because I could have 3 losses in a row, right? Or 3 wins in a row. The idea is that you're testing it, and Trading in the Zone talks about this, is actually the challenge at the end of the book. I want to see 100 tests, and whether you back test it, using TradingView, the ability to be able to replay and see, here's my theory. I'm going to sample trade it and see if it works. That will definitely speed up your experience, because you might have to wait 2 days for a setup to come up, depending on what your edge is. But define your damn system. Like, get it in there. Don't just be jumping all over the place, following a ton of different analysts. Oh, I saw this person on social media talking about this, and now I'm in this trade. I've not seen that go well for pretty much anybody. I mean, every once in a while you get somebody who's lucky for a while, but eventually the piper needs to get paid, and that falls apart. So next part of that 100% focus is thinking in probabilities. We're not thinking about, I'm a great trader. We're thinking about it from a sales perspective. It's literally the number of people you talk to. It's literally the number of trades you take. And that doesn't mean take more trades, but on average, I know 7 out of my 10 trades work over many years worth of tracking. So it's not just the 2.5 years that I have the bot recording from. Over many years, I'm going to lose some, and it is a cost of doing business to lose some. But I know that from a probability perspective, or the law of averages, that most of the time things go my direction. So next one, really focusing on volume and pure price action. not getting caught up in all the 57 different indicators that people have on their charts. And I talked about this a little bit earlier that wasn't recorded, but my crazy execution chart is there so members can see why I'm looking at things instead of just randomly being like, all right, there was the previous value area. And they're like, wait, how did you know that? Oh, you had to be looking at 3 days worth of charts, or that was the T+2 low or whatever. So I try to get it exemplified and then use anchored VWAP and volume profile. So I also have completely blank, like just candle charts up, like white candle charts on the 4-hour. They're not even green and red because I want to see what the chart structure is. So it's important that you're not in that 1-minute time frame, whole bunch of indicators, something to tell you. You want to study price action. You want to study tempo on the tick by tick or time and sales, but it's time to lean into that. And most importantly, you need to focus on risk management. So recap, define system, thinking in probabilities, price action volume, and focus on risk management. 0% focus on other people's opinions. You need to eliminate as much as you can in social media. So if you're finding impact from different people maybe that you follow, you don't know from an ethics perspective what they're doing. You don't know their trading history. You don't know a lot. I promise there's a lot you don't know. And that's one of the things I like about a community. That's one of the reasons I decided to go ahead in that crazy choice of deciding, after kind of the fallout that we had from the previous server, am I just going to go back to trading on my own? Because that really, I don't do drama at all. It drives me crazy. And that definitely counted as drama, as part of that. So making that decision to go ahead and open my own server and be able to kind of maintain that whole focus on trading psychology and education was because I wish I would have had it myself as a new trader. And that's why I'm here. So if you can eliminate some of that outside noise and not, you want to have people that that's where, the whole concept behind Trusted Trader and our analysts, of course, is that we have a very strong group, or very strong trading community with a lot of history. And if you're just following somebody random on social media, you might not know what they're going to produce over and over again. You just got excited by the thought. So I'm going to invite you to journal every day. And my wrapping phrase for that is no bullshit, no excuses. Let's do it. All right. Any follow-up on that, you guys? That was my filibuster.
Very well
Yeah.
said.
Oh, go ahead, Shadow.
Oh, no, go ahead. You're fine.
I was going to say, yeah, one thing with the social media aspect, I would say adding on to that, it's you versus you, never compare yourself to others. You're going to go on social media. I mean, who knows what's even real out there, but you're going to go on social media and see people make hundreds of thousands, millions, whatever it is, but just it's you versus you. So that's a great mindset to have. Just stay humble, keep your head down, and slowly compound and build up those accounts.
That's such great advice. I love that you've added that. That was something I told my kids when they were pretty young, is don't compare your insides to other people's outsides. Everything that's on social media is probably a little exaggerated, especially if you don't know the person personally. And I've always prided myself on that whole authenticity piece, but most people are not like that. They're impress the Joneses, beat the Joneses, keep up with the Joneses, however you want to do that phrase. I love it.
For sure. And
Yeah.
the only thing I really got to add is, the excitement of the trade itself. You want to mitigate as much as possible. And I find redirecting that energy towards a more constructive way, like getting excited, just, following my trading plan, like taking my stop loss. Yeah, it sucks getting stopped out, but the excitement that, hey, I followed my trading plan and statistically over hundreds and thousands of trades, then I'm still good, and all that stuff is where, if you want to put any kind of emotion towards anything in trading, is more your systematic approach to the market, and not so much the individual aspect of solo trade itself,
Right.
So other than that, it's nearly impossible to hide all emotions in training.
Oh yeah, you can't attach to the human brain. Not going to happen.
Yeah. It's not gonna.
I know
All we can
something
do-
I did. Oh,
Go for it.
okay. I know something I did when I first started. Like you said, that satisfaction of completing basically your game plan. I would have like this piece of paper. Now, it was basically a checklist, and I would just before I entered every trade. Some people have it digital too on Excel and Word. But where's your stop loss at? Where's your entry? Where's your target? What's your size? And you just go through and just check them off and just check them all off. And hey, is my indicators all lined up, multiple time frames? And if you can check off all those boxes, that's a great trade to be into.
That's actually something I was working on developing in March, and then it got kind of waylaid, as far as projects. But it's definitely something I want to have for the members. That is a trade entry sheet, and it's because when I am trading, I dedicate one piece of paper, one page to every single trade, and sometimes that'll only be a third filled with information, but it always has things like where's my stop? And it's funny to say that first because that's the end of the trade. But if I don't know where my stop is, I have no business entering a trade because I'm not thinking about what the end result is. So how is this invalidated, or where's my profit target is a huge piece of that. So I'll definitely be putting that out in the trading tools soon, but I'd love to see yours too. I think if you've got it written, I think members would like to see a variety of how all of us look at it. So that'd be awesome.
Okay, yeah, for sure. I'm slowly piling some info into here.
Cool. Yep. Yeah, I have. Apparently, I know what this weekend is too. I don't know, something like that. All right. So, thanks guys for hanging out. I think really there's no prize for trading like the hardest thing you can possibly trade. And I have something in Market Insights, or sorry, the Trading Psychology channel that goes a little bit more in depth than that. But ultimately, it goes back to there's no prize for the degree of difficulty. So if you're trading just to show how good you trade something, you're probably going to be unhappy in general. You'll be frustrated and stressed out. So don't trade it so that you can show off. Trade it because it fits what you're looking for as far as how you manage your trading business, and you'll be around for a long time. All right, I'm gonna go ahead and wrap this up. And if you guys have any questions, there is no such thing as a dumb question. We've all been where we all are, where you all are. And it's not that I'm smarter or better at trading or any of that. I've just done more dumb things, and I take a long time to learn things. I'm not I did that one time and I'm never doing that again. I'm gonna do it a bunch of times, more times than I would care to ever admit on most of the mistakes that I talk about. And I guess I am admitting it right now, so I don't even know if I can use that phrase over and over and over. So I'm a hard learner, but I'll tell you what, once I learn that lesson, it's there. It is not going anywhere. And so, if you're that person who learns it from one time, high five. I wish I could figure out what that special sauce is, but we've been there, I've been there. So hang in there. And I'm looking forward to seeing the growth and just how, even just in this first, are we a week? Yeah, we're a little over a week from all the chaos, but we're a week from opening the server and getting this off the ground. So thank you so much for you guys being here. And I really appreciate all the support.
Same here. We appreciate it too.
Yep. Thank you. This is a great community starting out here.
Awesome.
Can't wait.
Yep. Oh, take over the world, right? No, I was saying that. I'm like, not really. That's a Pinky in the Brain reference, but yep. The idea is there's a lot of people that need help, and our focus is on moving people forward in their trading, not just that whole challenge, blown up accounts, all that fun stuff. So looking forward to the future. I will catch you guys in about 20-25 minutes. I have to hop on a phone call.
Sounds good. Thank you.
All right. Catch you later.
See ya.